Welcome back. You're watching IndianOpen right here on BloombergQuint Live. Let's quickly take a look at what's been happening with regards to the Asian market setup this morning and then go across to see what our market are likely to do. You've got Japan, which has opened up higher by about 0.5%. Hong Kong's doing okay after that big cut that we saw in yesterday's session, but China still looking weak. Remember, we've still not seen the full impact of the coronavirus playing out with regards to the market mood as well. But conversations yesterday and a comment that came in from Tim Moore of Goldman Sachs, Neeraj, suggested that ahead of the Lunar Year celebrations, because of the uncertainty and the scale to which this contagion can happen, most Asia-dedicated funds, it would be prudent to actually take money off the table, come back after the Lunar Year celebrations to see if investments can be made afresh.
Yeah, I mean, we kind of don't quite estimate. It's difficult to estimate the impact of this, but as a previous chart also showed that it's happened in the past during SARS as well, that the markets have come off. Not trying to correlate either of the two instances, and unfortunately it's happening. But you never know that there could be continued pressure on the Asian indices over the next few days as well.
Yeah, and for Hong Kong also, tourism will get impacted,
yes,
because you've seen cases coming about in the Shenzhen region as well. But that's Asia. SGX Nifty for itself is doing fine. We've got a 0.5% pop on the SGX Nifty, 50 odd points higher, 12,242. Could give us a leg up this morning as we open up for trade. Also important to see what's been happening in the derivative space. As always, I've got a setup for you at the start of the show. Agam standing by to run us through that. Agam, good morning.
Good morning, Devina. Well, we saw the Nifty come off to a certain extent yesterday, even though we did see a little bit of recovery in the middle of the day. That wasn't really the case. Well, about 0.5% cut for the index, and more longs unwinding coming along for the Nifty futures. The Bank Nifty futures, on the other hand, seeing fresh short positions. Let's talk about options then. And when it comes to the options market, still a 500-point range between 12,000 and 12,500 based on maximum open interest. But we did see a lot of writing at the 12,200 call, and that is where we saw the most amount of accumulation coming along, thereby looking at a little more, well, a suggestion that there could be some more resistance there. Well, moving on to your India Volatility Index, that has also risen further, now inching back towards the mark of 16. The Nifty put-call ratio at a relatively neutral level of 1 now. That's also fallen off. And in terms of stocks, well, plenty to keep an eye on, but we did see more weakness in Indian Oil Corp, PFC, Cholamandalam Finance, all of them looking at selling. And in terms of stocks which just saw unwinding, there were the likes of Kotak Mahindra Bank, which did see a little bit of short covering, Dish TV, along with Century Textiles as well. It was a mixed day of trade, but considering ADRs were under a tad bit of pressure, let's wait and watch whether or not that trend continues, or should we see some amount of recovery today.
Well, right. Agam, thanks very much for that. Siddharth Kemka, I think, head of research, head of retail research at Motilal Oswal is joining us as well. Siddharth, great to have you this morning. Good morning to you. Let's talk about the numbers first and foremost that came out yesterday. I think Z was the big nifty number that came out yesterday, disappointing the street. What's your take on Z? And then we come down to the mid-cap and small-cap names that reported numbers.
Yeah, very good morning, Devina. So yes, Z numbers definitely were a miss. If you see the ad revenues that declined on 16%, and the bigger disappointment was on the margins front, where EBITDA margins almost were down 720 basis points on a Y-on-Y basis. So if you see overall the larger issues, so the core business which was performing till now has now started witnessing some deterioration. Although we do know that the media, generally the ad revenues are in sync with the economic growth, and with the economy not doing that well, there was expected to be some moderation, but this has been largely higher than what we were expecting. Apart from that, there are the key issues is about the related party transactions as well as the receivables from the related two companies, which continues to remain as a cause of concern. And over and above that, the overall overhang of the change in management, the stake sale by the promoters, which still remains as a big overhang on the company.
So then, therefore, what's the call, Siddharth? I mean, just looking at the receivables that they have to get as well, I'm sure this was discussed when you guys met in the morning. What's the call that you're giving out on Z Entertainment today?
So we had been having a neutral stance on Z for last 2 quarters now. Once the issue of the promoter stake sale came out, and specifically after the Q2 numbers, when the related party issues cropped up, that led to even more issues that is we are seeing to continue. So we are clearly staying away from Z from the last 2 quarters.
Okay, stay away from Z for the last 2 quarters. Now, full tilt towards earnings, stocks and news today. First, let's get in our research team to try and talk about all of these. L&T is likely to report a subdued quarter over the sluggishness in its execution, weakness in the international business as well, which is likely to add to the weakness. Darshan Johnson first to tell us about what the street is pricing in from India's largest infrastructure conglomerate. Darshan.
Yeah, so a 10% top line and EBITDA growth is something that we are factoring in, a 17% profit growth. So margins pretty much will be same at 11.2%. Now, there are 2 important factors. Firstly is the guidance on the revenue, and the second is the guidance on order. While revenues, they will be able to do it because they have been executing well. Most important is what they will do with terms of the guidance in terms of the order inflow. Now, if you look at it, the orders that they have declared in the 3rd quarter are extremely low. So that will come in anywhere between 10,000 to 20,000 crores. That's the estimate. It's much lower than the 30-40,000 crore run rate that they usually have. So, and in some quarters they were in 50,000 crores. So there is a very high probability that they may be struggling to meet the order inflow guidance this time around. So the management commentary on the order inflow guidance becomes extremely important. So 12 to 15% revenue growth guidance, that probably will be met. For the order inflow guidance, it's 10 to 12%. Now, what they need in the second half is close to 1.07 lakh crores to anywhere between 1.1 lakh crore, 1.10 lakh crores. So they need significant amount of orders to come in, and with 20-30,000 crores of orders coming in this quarter, it will be the ask rate for the 4th quarter will be extremely difficult. Now, in terms of the execution, yes, there were revenue growth probably might be slightly sluggish because new orders didn't come in because of the elections that were there. International markets have also been rather weak this time around. Key monitorable probably will be the working capital, what exactly is happening there. So the management commentary becomes much more important than the actual result itself.
All right. Darshan, thanks very much for that. Other than that, we're also going to be watching out for Asian Paints. Lower tax rates are likely to boost Asian Paints' bottom line. The paint maker may also see an expansion in margins. Yash Upadhyay is taking us through what the street is expecting from the company. Yash.
Good morning, Devina. So it's largely expected to be a steady quarter for Asian Paints. As far as their top line is concerned, the analysts are expecting about a 7% growth on a year-on-year basis, coming in at about 5,686 crores. EBITDA is seen higher by about 12.5%, while margins are seen expanding by nearly 100 basis points over the previous year. Net profit, as you rightly mentioned, would be boosted on account of the shift to the lower tax regime. So that is seen higher by almost 23% to 781 crore rupees. But that apart, the key number to watch out for, at least for Asian Paints, is the volume growth in the domestic decorative paint business, and that is where most of the analysts they are quite split, but the broad consensus does suggest that they would be able to do a double-digit volume growth in this quarter on the back of a high base of 22% growth that they did manage in the same quarter last year. That apart, crude oil prices they have eased considerably, and that should aid their margins. But remember, last quarter, despite the volume growth being higher than the estimate, the margins did disappoint, and that is on account of the function of product mix, and the product mix has been slowly and steadily has deteriorated because of the higher share of their economy paints to their overall revenue. So that would be something that we would be watching out as well. Apart from that, the company had taken certain price cuts as well as discounts in the previous quarter. So along with the volume growth, we would be also looking at the value growth in the 3rd quarter. That apart, well, the monsoons have been fairly positive this time around, and we've seen some positive news flow coming in as far as the agri companies are also concerned. So some color with respect to the demand outlook would be something that the street would be watching out for in terms of the management commentary. And lastly, the industrial paint business, how it has been doing. It has been under considerable pressure over the last 12 to 18 months on account of the overall slowdown. And while it does not contribute a whole lot, some guidance, some outlook with respect to how that business is shaping up would be something that the street will also be keeping a close eye on.
All right. Thanks, Yash, for that. Axis Bank is the other one also that's likely to report a healthy growth in its net profit numbers. A media-related account may lead to a slight deterioration in its asset quality. Shifani Malik takes us through what the street is pricing in.
It's expected to be a steady quarter for Axis Bank this time around. We are factoring in net interest income growth of 13% to 6348 crores. Pre-provisioning operating profits are expected to jump by 9%, and its profit figure is expected to go up by 27% to 2139 crores. Now, when it comes to the business metrics, the loan growth is expected to come in at about 15%, deposits grow 21%. So these will be good numbers in comparison to some of the other private lenders who have reported results so far. And what are the factors at play that are expected to play out for Axis Bank this time? The loan growth is expected to be led by retail unsecured book, SME book, which is expected to aid loan growth this time. And it will be interesting to see what kind of delinquencies they are seeing in the unsecured book, that is credit cards and personal loan portfolio. So remember, Kotak Bank has pointed out that they are seeing delinquencies rising in their unsecured book. So it will be interesting to see how the trends are shaping up in the retail category. Also, the bank, remember, raised funds a quarter back. So the benefit of which is likely to start coming in this quarter because it was the first full quarter of the capital raise, and slippages are expected to come in at about 4800 crores. In this quarter, the bank may recognize a media related exposure, so that may slip during the quarter and hence will show up as an NPA. Margins are expected to remain healthy at 3.5 to 3.6% versus 3.51 in the second quarter. Corporate slippages will be an interesting area to look at, especially the watch list category and the double B and below book. That entire book will be in focus for them. So some numbers that we are factoring in: gross NPA is 5.3% versus 5% on a sequential basis. So that's what broadly we are factoring in from Axis Bank this time.
Okay, now those are the previews. What about the results that have come out? Nikki Johnson with some of the key numbers that you need to watch out for today. Nikki, good morning.
Good morning, Neeraj. 5 earnings that we're tracking today. First, I'm going to start off with Polycab, which has reported fairly mixed set of numbers. Top line growth looks strong, but then margins have dropped from 16% to 13% in this quarter year-on-year basis on account of high raw material as well as the advertisement cost. If you look at the revenue performance, wire and cable segment revenue, they've been up by 18%, and FMEG segment revenue too has contributed and grown by as much as 34%. Balance sheet for the company remains healthy with net cash improving for the business. Overall, fairly stable quarter, you could say, for Polycab for that matter. Havells, where the results have been below estimates, revenue have been impacted by the weak macro liquidity challenges. Margins to an extent have been maintained on account of the cost rationalization measures that the company has undertaken. If you look at the top line performance, it's a decline across the board. If you look at the segment switchgear, lighting, or for that matter Lloyd segment revenue, they all are coming down on account of lack of demand and decline in LED TV business, which essentially has impacted the Lloyd segment revenue. For HDFC AMC, well, that's a fairly stable quarter coming in for this company as well. The revenue is up by 10%, net profitability is 44.9%, and the quarterly average AUM stands at 14% as compared to that of 23% sequentially. And with this, the AMC has retained the AUM growth target of 18%. So that's one stable set of quarter that you're looking in for HDFC AMC overall. Tejas Networks, now keep an eye out on this one. The company has warned about the profits for FY20, saying that they would not be profitable for FY20 as a whole. Just the basic numbers first. The top line, that's where the disappointment creeps in. 52.8% decline. EBITDA too is lower by 98%. The company has reported loss, and there is a sharp decline which is essentially seen in the revenues from Indian government segment, which has also weighed on the earning performance of the company. India Mart Intermesh, that is one counter which is a reported stellar set of numbers. Look at the top line performance, it's a 23% growth out there. EBITDA 58.5%. Net profitability of the company, that's risen by more than 2 folds. Clearly there is an increase in paying subscribers and high realization, which has overall impacted the operational performance and good performance of the company.
Nikki, thanks very much for that. So all of those numbers that you need to keep at the back of your mind. Polycab, I mean, the run up and the excitement, and you know, don't know what it looks like. It could be justified. You've got a City note, talking about increasing their PE targets from 22 times to 23 times, 1200 plus is their target price. Havells was a big disappointment at the other end on all of those parameters like Nikki highlighted. So may see a divergence within that space.
Yeah, and there is Tejas Networks. Siddharth, actually first come in on a couple of these and then we'll get to the charts as well. Just quick updates here. We saw KEI come in yesterday or day before yesterday post-market hours. Then we had Polycab and Havells yesterday. What did you make of these two numbers?
Yeah, Neeraj, so right now we are not covering or started covering on Polycab or even KEI. So we have coverage on Havells. However, there has been a stark difference in the numbers that were reported by the others, that is KEI and Polycab compared to Havells. Havells is now consistently, we are seeing the weak numbers getting impacted. Earlier because of the Lloyd acquisition, the numbers were impacted, and now the overall business is now witnessing a big slowdown. Compared to that, Polycab has benefited to some extent from exports that has aided revenue growth, while KEI in some of the niche segments, they have been able to maintain growth. Clearly, it looks like the market would favor the ones which have been reporting strong growth, and that is where we believe that the underperformance in Havells could continue for a while. One is the core business not showing good growth, and the second is the Lloyd acquisition, which has impacted the overall financials, including the balance sheet, which will take some time to see some improvement. Until that time, I think we have a neutral rating, and we would look towards the other avenues of the segment to find growth.
Okay, we'll watch out for that. Also, just one quick follow-up, and we'll talk about HDFC, AMC and some of the others later on, but do you guys have coverage on Tejas Networks? Siddharth?
No, Neeraj. No, we don't cover Tejas.
Okay. Okay, we'll come back with the others too, Siddharth, but just before we get to our chart experts, very disturbing commentary from Tejas Networks, and it probably shows why the market is justified in not giving a premium to any businesses which have either government receivables or government orders. The fact that they are saying they might not be profitable for FY20, and we know that receivables have always been an issue, so you can argue till the cows come home about how cheap this stock looked 2 months ago, but it was cheap for a reason, and I think it'll get cheaper or it'll fall in value today because this is not a good statement.
But even despite this, there were a few instances and a few days of trade where Tejas Network actually clocked in double-digit gains.
Yeah.
With regards to the last 3 months, it's still been up 14% for a company which is saying that they're not going to be profitable for the year. I think we could look at the last 6 months' performance as well to see what the stocks are.
There it would have come off, I think.
Yeah, about 30% lower. But you can see that between second half of November, that's when the stock actually picked up.
Yeah, I think since the mid-cap rally started, this one has seen some pullback, but this is a very disturbing statement from the company. I guess the stock will react today. Okay, let's talk about charts then. Amit Harchekar of Index Genius Investment Advisors, Johnson as the Shrikant Chauhan, Senior Vice President Technical Research at Kotak Securities. Gentlemen, both of you, good morning. Thanks for joining in. Shrikant, bullish, bearish, neutral today?
Good morning, Neeraj. See, for market, we are bullish. The trend is intact. Correction is which was due. I think that is happening. It was around 12,430, 450 area. From there, we were expecting that the market should correct because it was into overbought zone. And number of index heavyweights, they were also trading in the same zone. I'm just saying with the same pattern, they were trading at higher levels. So we are of the view that now whatever is happening is the correction before the announcement of the budget, outcome of the budget. And it will be an opportunity for positional traders to create some long positions. But yes, in the short term, 12,160, yesterday's lowest level, is going to act as a very good support for the market because it's a 50% area of support of the entire up move. So in case today, if we see the market is breaking these levels, then further more weakness towards 12,100 or maybe 12,050 is not ruled out. But that will be in short term in nature. So strategy should be to look for adding long positions in the morning with a stop loss at 12,160. Based on spot levels, and we can again expect 12,250, 260 on the higher side.
Amit, what about your index view?
Good morning, Neeraj.
Good morning.
We believe that if you see the price action all the way from November, it's November itself, we think this market is oscillating into a broadening ascending wedge, and that's why the momentum has been on the slower side for top large cap stocks. In fact, if you apply the even oscillators like relative strength index, it will clearly give you a third degree negative divergence, and which is again a warning signal for the market. So we believe this market is now poised for a dip. That's why even we have seen good up move in India VIX, which has again rose to around beyond 15%. We have a target of around 11,900 on the Nifty in the short term. The stop loss we are recommending on the futures would be 11,350. Apart from that, even since there is a good lower low formation in Bank Nifty, which has also has given a confirmation of an head and shoulder breakdown, there too we are expecting around 5% cut. So overall, we believe one needs to be quite cautious as there are a lot of divergences taking place in the market.
All right. Come back and discuss your stock ideas as well in just a few moments, Srikanth as well as Amit. But on to our special segment. Bloomberg Edge by Yash Upadhyay tells us about a pattern that the Bloomberg terminal has thrown up on a particular stock. Yash, good morning. What's the stock today?
Morning, Devina. So we are looking at Galaxy Surfactants, and some of these chemical companies, they have managed to outperform the markets, and Galaxy Surfactants being one of them. It has managed to gain for 3 consecutive days, and with that, the fear and greed indicator, which is a proprietary Bloomberg indicator, that has given a positive signal. Now, the fear and greed indicator basically is a measure or the spread of the 2 weighted moving averages of the price, and it oscillates on a 0 basis line. So any reading above the mark of 0 would mean that the fear and greed indicator would turn positive and would change its color from red to green and vice versa. Now coming back to the price chart of Galaxy Surfactants, and like I mentioned, for the last 3 consecutive trading sessions, we have been seeing the stock gaining, and with that, the fear and greed indicator in the lower panel, that has given a positive value as well. So after a series of red bars, it has again given a green bar, which is another indication of a trend continuation, because while we saw red bars form on the daily time frame, the price did not fall significantly. In fact, on the daily charts, it has been making higher lows as well. So clearly there is some amount of momentum coming in, and like I said, most of these chemical names have been doing well. One of these stocks could be Galaxy Surfactants to watch out for.
Okay, and how well is this done in the past, Yash?
They've been 4 out of the last 5 times that this indicator has given a positive signal. On an average over the next 1 month period, the stock has gained almost around 6.5%.
Okay, thanks very much, Yash, for that. Coming down to our experts as well and the kind of stocks that they're recommending this morning. Srikanth, let me begin with you. What are the stocks that you're advising?
See, Devina, we have to be very, very stock specific. We like Voltas, which is trading around 702, 703 levels, and we are of the view that now if mid-cap stocks are going to do well, then we need to focus on mid-cap 50 or mid-cap 100 stocks. It's, I think, component of top 10 stocks of mid-cap 50. So we like Voltas at current levels with a stop loss at 695, and we can again expect 725, 730 on the higher side. The other stock which we like is from the cement space, and yesterday there was good amount of buying attraction in almost all cement companies. They recovered from their lows. Ambuja Cement, which was around 207, 208, is showing a lot of strength on daily as well as on weekly, monthly charts. So we are expecting stock to move towards 215. We can keep stop loss at 205 for the same.
Okay, Amit, what about you? What are your stocks?
I have a 2 sell recommendation. My first recommendation would be going short on IndianOpen Bank. For one reason, the stock has confirmed a double top reversal after it formed a lower low. Plus, if you see from an index perspective, the index namely called S&P BSE Diversified Financial Revenue Growth Index, where IndianOpen Bank holds a major weightage, we believe that index is poised for a major breakdown. So we think since that index is already close towards the borderline, we believe the next cut for that index could be as high as around 7% in a very short term. So we think IndianOpen Bank could decline another 7 to 8% in matter of weeks. The stop loss we are recommending for the short positions on the futures is 1380, because we think that would be a turning point, and we are looking for a target close to 1260. Our second recommendation would be going short on Larsen and Toubro futures. Here the rationale is, if you see the decline from entirely from 1600 to all the way towards 1250, it has only managed to retrace around 23.6%. That these are typical signs of bear market where retracement fails to extend beyond 23.6%, and the momentum turns out to be quite slow. So right now we think this pullback is over, and right now the stock has again started a new leg of downtrend. So we are expecting another cut of 6 to 7% in the near term. The target we are looking in the short term would be 1210, and the stop loss we are recommending on a closing basis would be 1350, because as I said, 1336 was an intermediate low. If that gets violated, we need to revise our stance.
Okay. Siddharth, I want to draw your attention to HDFC AMC results. What did you make of the internals of HDFC AMC? The top line growth was 10%. They saw some drawdown in the SIP book as well. Is any of this disconcerting, or would you be neutral or bullish on HDFC AMC?
And Neeraj, so let me first tell you that we don't cover HDFC AMC, but being a market leader and in this market, we do have a look at some of these numbers. So numbers are kind of mixed. There was some encouraging data from, even if you see the Q3 overall data from the mutual fund industry side, they were better, and that has led to some growth in the overall top line in the AUM that they manage. There has been some decline in the SIP book, but I think that is what the industry numbers are. We saw some decline and then towards the end some pickup. And I think with the kind of market interest that we are seeing in Jan, the SIP book definitely will improve. The only question that remains is that on back of this strong performance, will the valuations are justifiable, which is something that we have not been able to come out with a firm view, and that is the reason why we are still not able to cover the stock.
But look at that, 113% in the last 12 months. It just keeps going one way. December saw a slight bit of a correction that was probably also used to buy into. It's kind of flatline post that, but nonetheless, it's still given hefty returns. Valuations have become extremely rich for this particular counter. 34 seconds left to go for market pre-open. SGX Nifty still holding on to its early morning gains of 50 odd points. It's trading at about 12,241. Rest of Asia, besides China, is also doing okay. So we've got 0.5% odd gains coming in for the Japanese market as well as for Hong Kong, which is now up 168 points. Interestingly, and important to watch out for some of those numbers, Z from the index, Tejas Network on the downside today, Havells on the downside today, the kind of disappointing numbers that they've posted. We'll be watching out for all of that, as well as the currency too. Pre-open on your screen, Nifty taking cues from the SGX, opening marginally positive as of now, but these are just your initial ticks that have come in. Let's take a look at what the stocks are doing. Particularly, I want to look at Z and what that stock's doing. Pre-open, the first tick, obviously a Z negative bias, 7% under, 264. We'll wait for these prices to consolidate. More gainers than losers at the start of it. NTPC is down about 3% odd. Coal India is down 3%. TCS is down 2.5%. HDFC Bank's down 0.5%. Dr. Reddy's, Sun Pharma, Aisha are some of your other bigger losers. Gainers then, Bharti Airtel is showing an unnatural 10% pop this morning. GAIL is up 3.25. You've got Axis Bank. Infratel yesterday saw an 8% move on the upside yesterday. You've got 2% more today. Yes Bank at 38.8 is up 1%. SBI is up 1%. ICICI Bank, IndusInd Bank, HDFC Limited, and even L&T ahead of numbers is up 1%. But these are pre-open ticks. Wait for 9:08. We'll get the consolidated figures.
Yeah, well, I think the market may be reading a bit, and again, early days, so we don't know what prices Bharti Airtel will settle at, but reading too much into this increase in the FI limit news that has come out, let's wait and watch what happens there. The other stock to focus on is Havells. That stock should start off lower. In addition to Z that Devina pointed, Havells is the other one which has come out with a weak set of numbers and therefore could be reactive today. We'll take a technical view too. We've taken a fundamental view already on Havells, but the technical view would be important too. So that is one more stock to monitor in the session. HDFC AMC, and let's see if that stock is reacting in any fashion to a slightly mixed set of numbers. 3,200, not too much. And Polycab, I'm particularly enthused with the fact that with the higher ad expenses, they've shown top line growth. And maybe the market might reward it too, because gaining market share in a quarter wherein some of the other competitors have lost might actually be considered a prudent strategy. We'll wait and watch what happens to this one, but looks like the start off might be positive. So 5% up for Havells as well in the session today. And Tejas Networks, that was the last one that I was coming to. Should be seeing a weak start, and not surprised here, 9.5%. When a company gives a warning about they're not being able to remain profitable for FY20 with no clear direction or guidance about what FY21 could do, and clearly I'm not blaming them, I'm just saying they can't give it, no surprise that this is what would be happening to that stock. So, yep, starting off on a weak footing. Let's wait and watch what happens there. Before we get to our experts with all of these stocks, because it's the result reactions that we should be focusing on today, get in Somit Sarkaru Johnson with the top brokerage calls for the morning. Somit, good morning.
Good morning, Neeraj. I'll start off with Goldman Sachs on hospitals. Now, for Apollo Hospital, they have upgraded their rating to a buy from a neutral and have hiked the target price to 1,920 from 1,490. Now, the brokerage sees strong execution at 10 plus new hospitals and encouraging patient volumes in the proton centers. Along with this, the promoter pledge is also expected to reduce post the Apollo Munich transaction. Also, the concerns around the related party pharma distribution structure is likely to wane off, says the brokerage. And on the back of this, it has upgraded its rating. For Fortis Healthcare, they have upgraded their rating to buy from a neutral and have hiked the target price to 176 from 150. Now, according to the brokerage, encouraging volumes at key hospitals will lead to sustainable recovery in that segment. Along with this, it is also expecting growth pickup in diagnostic, and it believes that the management will deliver on the cost saving target. So that's the reason they have upgraded this counter also to a buy rating. The second one is on Citi on Havells India, where they have downgraded their rating on Havells India to a neutral from a buy and have cut the target price to 636 from 766. Now, this is post the company reported a very weak revenue growth in the third quarter. All segments of the company saw a degrowth except for the electrical consumer durable segment, which managed to show a growth of only 1% compared to last year. The Lloyd AC performance was reasonable, says the brokerage, but the LED TVs led a decline in the overall revenues for the company. However, the margin and the balance sheet were pretty much well, says the brokerage. Now, due to a weaker than expected demand environment and hazy demand outlook, the brokerage has cut its FY 2021 and 22 EPS estimates by 11%, 14% and 14% each, and the valuation multiple has also been reduced to factor in the unclear demand outlook, and that's the reason this downgrade has come in for this stock.
Okay, thanks very much for that. And Havells continues to be the stock in focus. Shrikant, would you go short?
See, like already the stock is down. It was around 620, 610 levels, but it has broken important support areas. So in case if we see the stock is opening somewhere around 560, 550, then there certainly it's a buy because it is going to complete its corrective pattern. But if it is opening somewhere around 590 or 600 levels, then certainly it's a short.
You know, I wonder, actually, Siddharth, I know we've discussed Havells just 5 minutes ago, but if it does start off as low as the first 5 minutes are suggesting, let's say around these 560, 565, maybe at 555 levels, what valuations does it come to? About 25 times. Is that an attractive level to initiate any kind of long on Havells?
Neeraj, if you are looking from a short-term trading perspective, maybe that could be a good entry point. But if you are looking from an investment perspective, as I said earlier, so if you see the return ratios profile and the overall balance sheet that has seen the kind of deterioration after the Lloyd acquisition, I think this would be a fair value. I would not see a much upside until unless we see improvement in one, the balance sheet, the return ratios, and two, the kind of growth that the PNL is now seeing the decline that improves. So the PNL growth could come back maybe 1 or 2 quarters later, but the balance sheet is where I am more concerned about right now. So maybe I think the next financial year may also be a year of consolidation for Havells, and from there on could see some improvement wherein I can turn positive on a Havells from an investment perspective.
Okay, Havells, we'll get the management shortly, post-market opening, so it's going to be interesting to see what kind of comments the management puts out with regards to, and whether or not there's any forward-looking statement that they can give us. Another stock is Avanti Feeds. The stock is back at 704 now. Last 7 days has given you 14% returns. Last 3 months it's been up about 56%. Would you buy Avanti Feeds, Shrikant?
See, if there is a medium to long-term view, then certainly it's a buy because the stock has made higher bottom and it is reversing back very sharply with very good volume-based recovery, we can say, and delivery-based volumes are also encouraging. So one thing is very clear that in the short term, we are going to see the levels of at least 660, 650 on the higher side. So if there are any long positions, just hold on to it. But if there is a medium to long-term view, then even at this price, it's a buy because based on charts, we are expecting stock to is going to cross its previous high.
By the way, Havells recovers some bit of that slam dunk that it was apparent. It's not going to start off 10% lower. If the pre-open rates are to be believed, maybe it'll start off about 2% lower. The pre-open rates are just about settling down. These could well be the factual levels at which some of these stocks start off trading in the session today. One stock that is looking very strong, and Amit Tarchekar come in on Bharti Airtel from the levels that it is at. Would you consider initiating a fresh trade?
Well, I would wait for a dip of around 3 to 4% for initiating long trade. We think on a long-term perspective, we see a target of around 555 to 560 because the stock is showing good amount of accumulation when it was around the 370, 380 zone. So we think the overall target of that breakout is giving you a target of 560, 570. So that should be the area I think I would suggest a profit booking taking place.
All right. We've got Bajaj Finance also now, which is at around 41.86. Yes, SBI struggles around that 317 marker. So it's just been holding on to those levels since the last few days, not really moving much. But over the last 7 days, it's still been down about 4.5%. Amit, a quick word, an SBI from the PSU space, and then an HDFC Bank after the correction that we've seen over the last 2 or 3 days.
Well, as I said, the Bank Nifty has already confirmed a lower low formation, and that is because of the weakness of both SBI and HDFC Bank. State Bank of India, we think the triangle formation of last 3 months is complete, and we are expecting stock to slide towards 275. We would open a short positions below 305. So as I said, still 8 rupees to go. The moment that breaks, we will open short positions with a stop loss of 330, and we are looking for a target of 275, 280.
Okay, well, watch out. HDFC Bank is the other one that you need to monitor, and I think today's numbers from Axis Bank could well be very, very crucial in terms of what they do. So watch out for Axis today, likely to start off lower, and then Larsen and Toubro and Asian Paints are the other two very important numbers that you watch out for. Actually, since we are minutes away from market open, first let's tell our viewers all that they need to know to stay ahead in trade today, and then we continue our conversation with our guests. First, weakness in advertising revenues lead to Zee Entertainment missing estimates in the third quarter. The stock likely to start off a couple of percentage points lower.
Among broader market earnings reported after market hours, Polycab top-line growth remains strong. Margins are impacted on the back of higher cost. On the other hand, you've got HDFC AMC's AUM growth slowing, while PMS income aids the bottom line.
SBI Chairman Rajneesh Kumar says the Indian banking system cannot afford a shutdown of a telecom company. He also says there will be no addition to bad loans from RBI's June 7 circular.
Baba Kalyani of Bharat Forge tells BloombergQuint that the situation in the auto sector should normalize in the next 2 quarters.
In key brokerage calls, Citi has downgraded Havells to a neutral from buy and has also cut its target price to 636 rupees from 766 rupees earlier.
And lastly, 3 nifty companies, Larsen and Toubro, Asian Paints and Axis Bank, will be reporting their third quarter results today.
We'll watch out for all of these, as I said, they're very important stocks to monitor. As the pre-open rates have settled down, Infratel yet again likely to start off as the top gainer after their 8% uptick yesterday, and Zee likely to start off as the top loser. Siddharth Khemka, do you guys have coverage on Bharti Infratel? I know Motilal Oswal as a house prefers Airtel as a stock as amongst the top ideas. What about Infratel though? What is the view there?
So we do look at Bharti Infratel as well, but I think the bigger concern on Bharti Infratel was being a provider to all the telecom industry. Even if one player were to get out, and this is after the consolidation of the industry to just 3 to 4 players, and if one player were to go out of business, you lose a lot of revenue from that. So that's the biggest concern or the overhang is there on the company right now. The recent news flows with regards to some relief from the government or from the Supreme Court with regards to the AQR, that could lead to some relief, and that is what is driving the sentiment. So very difficult to fundamentally say what will happen, although our telecom analyst believes that there is a big risk on Vodafone Idea that they could be out of business if this liability continues on them, and if that were to happen, then there would be collateral damage on Bharti Infratel as well.
So do you track Prestige Estates? What's the view here?
Sorry?
Prestige Estates. The stock has been extremely active. Yesterday, obviously, you saw some profit taking. But aside from that, within the real estate pocket, is there anything that you like?
So overall, if you see in the real estate, you'd have to look at region-specific issues. We have been having positive views on some of the Mumbai-based real estate players with the like of Oberoi and Phoenix. We recently also initiated coverage on Prestige from the south, from the Bangalore market, where we feel that the focused approach of the management and the growth that is being witnessed by some of these large organized players after the RERA and the kind of liquidity challenges that some of the local players are seeing, that is something that is definitely helping some of these players. Definitely these companies have moved up in the recent past, and that is where you can see some of these players. For example, we continue to like Oberoi from the Mumbai region and Prestige from the south region.
Okay. Some stocks to monitor in the session today. Siddharth Khemka, take a moment to thank you for joining in and giving us your perspective. Really appreciate your time. That's the view from Siddharth Khemka on a bunch of things that you should be monitoring in the session today. Z is likely to start off lower, so you've got to keep that at the back of your mind. That will be an important stock to monitor. But we might not have too much of movement in some of the other large cap names, so keep that at the back of your mind. But we're about a minute away from market open. Let's try and take the top calls from our experts. Amit Harchekar, I'll come to you. You've given 2 short calls already, but if you were to bet on one stock, one key stock in the session today, which one would that be? Your top trade?
Well, I would suggest going short on Hindalco, because that has already confirmed another double top. I would suggest a stop loss of 212, and I would be looking for a target of 195.
All right, going short on Hindalco. What about you, Shrikant? What's going to be your top call for the day?
See, apart from Voltas and Ambuja Cement, we also like ICICI Prudential, which is trading around 492. We are expecting 510, 515. We can keep stop loss at 485.
All right, ICICI reported its numbers yesterday. You did see gross premium increasing by about 9% APE growth, I think, for the 9 months has been flattish, I think 1.2% on that front. But the stock did okay for itself in trade. The stock's now at about 492.
Yeah, I think the VNB margin performance was decent, so maybe that will aid the stock. But we are seconds away from market open. So let's try and stick to what the markets could do on open. We'll likely start off in the green, about 1/4% or maybe 1/3%. The key is, can we build on from there, or the weakness over the last few days will come back and haunt us? But here's how we're starting off. 49 points for the Nifty 50, up about 1/3% or thereabouts. About 150 odd for the Sensex, about 1/3% again. The Bank Nifty stronger today, 182 points, 0.6% higher. So a good start to the Bank Nifty in the session, and that should be aiding the sentiment. The mid cap and the small cap indices should come up on your screen. About 0.5% up for the mid cap space, the small cap space about 1/3%. So not a bad start to the trading day. The question is, can we build on from here, as I said. Let's get the heat map. A lot of green, very little red, which is actually a good thing from a bull's perspective. What's gaining? Bharti Airtel is up another 2% in trade. What a strong stock this one is. Then you have Vedanta, Yes Bank, Bharti Infratel up about 1% after the 8% uptick yesterday. There's strength in SBI as well, and Infosys puts in some gains, so that is one more heavyweight contributing. In between, you have an Eicher Motors doing well. HDFC Bank and Bajaj Finance too are in the green, as are ICICI Bank and HDFC and Reliance. So the heavyweights are in the green, which is actually aiding the sentiment on the bourses, which is why we are up about 0.5%. What's not doing well? Coal India is down about 2.5%. ONGC is down about 1.5%. NTPC is down. Power Grid is down. So PSUs are taking a bit of a beating. And in between, wedged in between them, is Z Entertainment, down about 1.8% now. So that one is not looking all that strong in the session today. So net, the market breadth is positive, and which is actually a very good sign. Heavyweights are participating, and the Bank Nifty is now up 194 points, almost 0.6% in trade. Devina, what are you spotting?
Well, we'll start off first with the reactions that we are seeing to the results. So Havells, Polycab, we'll just bring that up and see how those counters are doing in trade today. Havells is down about 4.5%. Polycab on the other side is up about 4%, so 11.25 now for Polycab. Tejas Networks, the other one, a very disappointing commentary for the management, it's down about 8%. Aside from that, Canfin Homes, yesterday you got an extremely positive commentary from the management with regards to a growth of 20%. Stock yesterday was up 15%, today is up another 1.7%. You've got the likes of an Avanti Feeds at 714 now, so regaining those levels that it had hit just a few days ago. It had gone down to about 685, and from there it's back to 714. Granules India, they've approved the buyback. Yesterday the results also came out. The stock's up 3.5% today. Then you've got the likes of KEC International, PNB Housing Finance, Farag Milk Foods, Chambal Fertilizers, that does well. Ashoka Bullcorn, PFC moves up today. And then you've got the likes of an HCC, smaller name, but it's doing fine. Lakshmi Vilas Bank, Apollo Hospitals, Varun Beverages are some of your key gainers in today's session. Losers then, we've got Bharat Electronics, which is down 2.5%. Oil India is lower. NMDC is lower. Dish TV is lower. Snowman Logistics is down 1%. Repco Home Finance and Z-Learn are some of the other bigger losers in trade. More gains than losses. The breadth is looking positive as well. So 237 stocks are declining versus gaining versus 900 stocks which have gained in early morning trade.
Yep, well, so lots of stocks and as we said, the likes of Tejas Networks, etc. would be in focus. Just one quick question, Siddharth. Shrikant, anything that stands out for you as the first 3-4 minutes of market open?
Bharti is no doubt is showing a lot of strength, and there we have view that it is heading higher. It is now showing a lot of short covering to happen in the near term. If we see the stock is crossing 550, then huge amount of short covering is not ruled out, and in that case even the possibility of 600, 620 is also not ruled out. But at current levels, means I'm to say if we see the market after opening, then I think banks are doing well, and HDFC Bank specifically, which has formed multiple bottoms somewhere around 1240, 1245, is now reversing back. So from here we should look for adding HDFC Bank to our trading portfolio. We can again see the levels of at least 1280 or 1265 on the higher side.
Okay, that's HDFC Bank, about 0.6% higher. Amit, we've been, when we hear you, you've got a lot of short calls that we've seen. But anything that, according to you, that you've monitored where the stock is actually good for a bigger upside?
Well, one of my favorite stock is Tata Motors, and I see it testing 230, 240. Even with our view that Nifty would be heading lower below 11,900. So that is a contra trade we are looking at. So any decline in Tata Motors toward 178, 180, I think it becomes an excellent buying opportunity. Same is case for stock like Vedanta, which is actually going through a good phase of accumulation since last 3-4 months. So we believe these are the stocks with a negative beta, and they will outperform the market when the Nifty starts to move lower. But apart from that, if you see the large cap universe, especially the top 10 stocks in the Nifty, I think they are clearly giving signs of tiring out, and we think that is where the broader markets is susceptible to a decline. Apart from that, if you see from the angle of a broad-based market, if you see the price action of even Nifty equal weighted index, where every stock in the Nifty 50 has around a weightage of 2%, that index has only managed to retrace 62% to 63% of the entire decline. That tells you the real story, what is happening on this market. Only handful of stocks are taking markets higher, and that's why we feel this rally remains unsustainable.
Okay, we leave it at that. Thanks very much, Amit, and thank you very much, Shrikant, for joining us this morning. Rahul Singh, CIO of Equities at Tata Mutual Fund, is also joining us this morning. Rahul, thanks very much for taking out the time. Let's get in your gauge of what we're witnessing right now with regards to the start of the new year, the excitement around the equity markets, and the fact that the earnings season is somewhat of a damn squib. What is your take?
Yes, hi, good morning. I think what we are seeing in the market today is what I think we've all been expecting somewhat through the last 3 months. If you look at the rally since the corporate tax cut was mainly led by the large caps, and the markets became narrower, which was continuing what happened in 2018. So what we are seeing now is, I would call it as a one-time reset between mid caps and large caps, and to some extent small caps. We have seen that mid cap valuations had come down to 5 to 10% discount to the large cap valuations. And the last time we saw these kind of discounts was almost 9-10 years back. So this is not to say that the mid caps will again go back to 20, 30, 40% premium to large caps anytime soon. But I think the discount at which mid caps had come down to are even there today means that the underperformance to the large caps is not going to be material from here on. And that gives a lot of confidence to the market and to the fund managers to start picking stocks in the mid-cap side on a bottom-up basis. And that is something what we are seeing today, that some of the quality mid-caps or the second rung of quality mid-caps really, which have started to do well, started to participate also because valuations had become very, very reasonable. Also here one has to realize that some of the large cap results which have come out in the last week or so have not been beating expectations. They have been either barely meeting expectations or short of expectations, and we are talking of the heavyweight names in the large caps. And that just adds to this broadening of the market trend which we are seeing because of the valuation gap which was there. So that I think is going to be the theme for 2020 in my view. Obviously economic situation is not the prettiest in a long time, but I think as the recovery comes back either on the back of the jump in the rural incomes post a good harvest and rural inflation, or the reduction in the risk aversion in the market because of the way the NBFC situation has panned out. I think combination of these two factors is what will lead to a gradual recovery, and that is when mid and small can do much better than what you have seen over the last month or so.
The results aren't looking that great though, Rahul. Is that a problem?
Well, actually the results are not looking great for some of the companies from which the expectations were very high. And therefore, I don't see the results being a disaster for some of those large caps. But yes, they are coming little short of expectations. And that, I think, is a function of just the sheer macro which these companies are dealing with. And we saw large banks kind of also showing, some large retail banks, private sector banks also showing some amount of stress either coming from agri or SME or CV portfolio, and of course some small lumpy corporate accounts. So nobody is escaping this slowdown really, if that is what is the message which is coming out from the results. And that is what is the message which the market should take away, because so far the markets were behaving as if some of these large caps or maybe the quality mid caps would see through this slowdown without getting any impact whatsoever. And that is clearly not true, and that is clearly something which is coming out in the results. So to that extent it's healthy for the markets to broaden, because the huge dichotomy between the quality large cap and the mid and small cap was so much that it was giving too much of benefit of doubt to some of these names which have become quite expensive.
Okay. You mentioned that CIOs and fund managers might have the confidence to start investing in pockets at the broader end of the spectrum. At Tata AMC, which are the themes which are largely mid-cap-ish in nature, Rahul, or non-large cap in nature, that you guys believe could actually show growth?
So when it comes to mid-cap, we really don't chase themes. We like to buy more bottom-up ideas. So, but even if we're to look at themes, they'll be very, very niche themes. They will not be like big themes. So something on the gas utilities we have been liking, and that is something which we like at this point of time. Similarly, on the agrochemical space, I think there is good momentum both on the domestic market front as well as globally for the companies which are exporting their products globally. So I think a couple of themes like that, and then it becomes really a bottom-up stock selection. It's very difficult to put them or bracket them into themes like you can in large caps.
Okay. In which case, one question, we're just starting to see some of the capital market linked companies come out of the results, and thus far they've all looked okay, whether it's an AMC, whether it's an insurance company which has not linkage now, and today we might see some wealth management and AMC and broking companies come out with numbers too. Is that a pocket that could be of interest, Rahul? I know you said that you don't approach themes top down, but just wondering because they would have a common element of capital markets to them.
Yes and no. I think obviously on the asset management side, on the wealth management side, some of the valuations are looking reasonable. At the same time, all the correction in the fee structure, etc., have happened over the last couple of years. So, so to that extent, I think a lot of correction in the business models have already happened, and the valuations are reasonable. They are definitely not expensive. But again, these are high beta sectors, so you are essentially buying a stock or a sector in this space, which is going to be highly leveraged to how the capital market behaves, how the equity market behaves. So one has to be careful buying those high beta names which have got such high leverage to the equity markets per se. If we can get better risk reward in areas like I mentioned, a couple of areas which I mentioned where there are non-capital market drivers of earnings, and there are more, I would say, secular or cyclical drivers of earnings, we would probably prefer that more. But again, as I said, I think from a valuation point of view and a positioning point of view, they are also well positioned.
Right. Rahul, great chatting with you this morning. Thank you so much for joining us.
Thank you.
On to another important voice, that Nandita Parker is willing to bet on environment solution companies. The managing partner of Karma Capital Management says the global thrust on fighting climate change has created an opportunity for such companies. Listen into a small slice of a conversation with her.
We tend to not be bullish on the automobile industry for a number of reasons. But other than that, the rest, infrastructure related industries, companies that are focused on sewage treatment, wastewater treatment, decarbonization, biomass, waste to energy, clean energy, anything to do with the environment, I think we're very bullish on, and we're expecting a change there. We also think that particularly with the global focus on plastics pollution of the rivers as well as oceans, this is becoming a big issue, and a switch over to paper packaging is a very important global trend that we're seeing. And so I think India as well has a number of paper companies, so they should see some amount of interest. So yeah, there is a lot more to choose from today as a result of the very large valuation gap that what has existed in the past. But let's wait and see what the budget brings out, and whether it will attract the 25 to 35 billion dollar type of FII investment that India has the potential of bringing in.
Yeah, potential which we've not been able to tap in for some time now, Nandita. And that was something that I wanted to talk to you about. FIIs looking for growth of late are not going to be able to find that in India. Now, when they're talking about a GDP growth of 4.8%, most of foreign brokerages are talking about North Asia as a pocket where much of the money is starting to flow. So what do you think will interest them to come to Indian shores and invest?
Right. So I think if the government takes very credible steps to address some of the concerns of foreign investors, when it comes to growth, as we talked about, spending on infrastructure, addressing the taxation challenges that companies are facing, removing tax uncertainty, removing regulatory hurdles, making the environment a lot more predictable. So I think when it comes to risk capital, capital is looking for risk reward in a different way today. And India needs to take cognizance of the fact that there are lots of places to choose from, and in order to regain its top spot on the totem pole, it really needs to make these big policy shifts. And I'm pretty sure that if it does, it will be rewarded, and we can see, the next 5 years can be the start of a very interesting super cycle of investment in India.
Right. The government came out with corporate tax cuts, which really helped the bottom line of all of the companies. Expectations are that you may actually land up seeing something with regards to the personal tax in the budget as well, which could leave more money in the hands of consumer, which again could be used to spur the consumption cycle. Are you expecting anything of that sort?
I mean, it's hard to say, so let's just wait and see.
Well, let's wait and see. And you can read more about this on our website, BloombergQuint.com. But we need to slip into a break. Up next, we discuss earnings. Girish Kosgi of Canfin Holmes Johnson will speak about their quarter, and Anil Rai Gupta of Havells India will throw some perspective on what could happen with that company going ahead.